The largest IPO in American history, SpaceX, goes public this Friday at $135 a share. That's around $1.75 trillion in total value. But something happened in February that changed what you're actually buying. Elon Musk merged his AI company, XAI, into SpaceX in February of this year. So when you buy SpaceX stock on Friday, you're not just buying a rocket company. You're buying the biggest bet on AI infrastructure ever made. Here's something in the SpaceX IPO filing that's easy to miss. 30% of the shares are allocated to retail investors. That's unusually high for an IPO of this size. Some analysts have called it worrying. Typically, big IPOs place most of their shares with institutional investors, entities such as pension funds and mutual funds who hold long-term and can help stabilize volatile trading. Now, a heavy retail allocation means more volatility. Individual investors buy and sell faster. Elon Musk is selling 0 shares. He retains about 84% of the voting power. The retail investor provides the capital. Musk retains the control. So the SpaceX IPO isn't happening in a vacuum. 2 other major AI companies just filed their confidential S-1s with the SEC, Anthropic and OpenAI. Anthropic is expected to go public later this year. OpenAI just filed its confidential paperwork within the last few weeks. Together with SpaceX, these 3 IPOs could reshape how public markets value artificial intelligence. And SpaceX is now setting the template. Here's what to watch for. First, the infrastructure model. SpaceX is going to prove that the market will value AI compute, the actual picks and shovels, as highly as the AI models themselves. Anthropic and OpenAI build the software. SpaceX provides the hardware. Different businesses, but the public market will compare them directly. Second, founder control structure. Elon Musk's dual class shares give him 84% voting power, as we talked about, while also selling 0 personal shares. If that works, and if institutional investors accept it, expect Anthropic and OpenAI to follow the same playbook. Their founders will want the same deal that Elon got. Third, retail allocation. If 30% retail creates the volatility that analysts expect, the next AI IPOs will quietly reduce that number. And if it works, if retail investors hold and surge at that 30% level, expect more companies to open the doors potentially even wider. This is the start of the AI IPO era, and the rules are being written right now as we speak. That's what this channel is all about, what AI gets right and what it gets wrong, and what you need to know before your competitors do. Click like and subscribe. We're just getting started.